That's right. It is the Infrastructure Summit, Day 2 of the Singapore FinTech Festival, and we are focusing on SMEs. In the next session, business leaders from financial institutions and international banks will discuss the impact of the shifts in trade flows and supply chains on emerging economies. They'll also debate the post-pandemic path in building increased resilience amongst small and medium-sized enterprises, and of course, better access to finance through improved information and digitalization. So, moderating the next panel will be Matt Gamser, who is Chief Executive Officer of SME Finance Forum. And joining him on the panel, Neil Daswani, who is the Global Head of Business, Banking and Corporate Partnerships at Standard Chartered Bank, Ari Sarker, and who is the Co-President of Asia Pacific at Mastercard, Rajat M. Nag, who is a Distinguished Fellow at the National Council of Applied Economic Research, and Tang, Ning, who is the Chief Executive Officer at CreditEase. Let's join now Matt Gamser and his panel to hear their thoughts on the small and medium enterprises' access to digital finance.
So, good morning from the Washington, D.C. area. Good evening to all of you in Singapore, and good afternoon to any people who are joining us from the whole world in between. I'm Matt Gamser, CEO of the SME Finance Forum, and it's a great pleasure to be chairing this august panel. Just a brief word, the SME Finance Forum was created by the G20 countries, and it's a center for knowledge exchange and networking and public-private dialogue in the field of SME financing. We have a membership of banks and fintechs and development banks and other institutions devoted to improving the state of SME access to finance around the world. That's now more than 215 institutions working in just about every country in the world. Today, we're going to talk about digital financing of SMEs and also how the digitization of SME financing is affecting and can affect the COVID situation. Because I think, as all of you know, SMEs, even pre-COVID, didn't have such a great treatment in access to finance in many markets. SMEs have always been that awkward child in between the very high-touch corporate finance and the very automated consumer finance that most institutions have been able to more or less master in many markets. SMEs, by contrast, have sat in between. It's been hard to figure out how to deal with them at scale, affordably, while managing risk. And if that wasn't bad enough, now we have a COVID-19 situation where the SMEs are both directly affected in their business, and even the financial institutions that were treating them are affected. But of course, behind every dark cloud, there are also silver linings, and I hope our panel will talk about the silver linings and where we are going. You heard who they are. I'm going to introduce them one by one as they talk about different aspects of this problem. And I'm going to start by bringing in Rajat, because Rajat has had a long and distinguished career in the Asian Development Bank. He's now back in India, where he's both an advisor to institutions that are serving micro enterprises, but he's also involved in many of the leading think tanks and other institutions looking at this problem from a broad point of view. So I thought he can give us a bit of an overview on this situation. So Rajat, please.
Thank you very much, Matt. Well, silver linings, I'm sure they are there. We'll hopefully see them soon, though I must confess that I'm not seeing them as yet. And I'd like to expand our discussion a bit, Matt, if I may, to also bring in people at the bottom of the pyramid, because they are actually the ones who are hurting even more. And that is, of course, the micro sector. I would also like to, just for the panel to reflect a bit on, talk a bit about the global value chain, because one of the effects of the COVID has been, of course, how that has been impacted. So let me take the global value chain point first, because I think it has an effect throughout the financial sector, both SMEs and the micro, and of course the larger context. And that is that the global value chains have been structurally affected considerably in the last few years, notwithstanding the pandemic. And that has been essentially that the global value chain has been affected much more by greater trade in services than in goods, though it is still much larger in goods than services. but the services sector is growing at almost 60% higher than the goods sector. And a large part of that is knowledge-driven. And a large part of that, in turn, really therefore comes from countries and markets which have a knowledge advantage, the ones with the skills. And interestingly, it is only less than a fifth that the labor costs have played a role in the arbitrage in the global value chain. And the reason I bring that in is because I think that the entire global financial system is getting considerably affected by the situation because of the structural changes I've just mentioned, and also the COVID itself. Specifically about SMEs, SMEs, of course, have always had difficulties accessing the formal financial sector, and I'm looking forward to my other colleagues to talk more about it. But what the COVID situation has done is that the banking sector has also started to freeze up, just at the time when the demand side is being affected and the payments from their clients, be it small, medium enterprises, micro enterprises, becoming more and more difficult. The credit flow, in spite of government's efforts at stimulus, is not responding. And so there is sand in the gear. And in spite of efforts by the central banks who have kept their repo rates low, in spite of fiscal stimulus is being provided, what I'm noticing is that the demand side is not kicking in. And this is particularly affecting the ability of the SME to essentially keep the trades financing, the cycles going. And just one last word on the micro, what we're noticing is that the people who essentially are always, I find, the best credit risks, under the effect of the economic lockdowns inevitable in many places, are essentially again getting frozen out of the credit market. And this is where I think the governments, in terms of extending the moratorium, extending the repayment periods, or even just direct assistance to that sector need to come in. Because a great challenge I think we're facing is with the limited access to finance from the SMEs, and the micro sector, the inequality issues, which was a major challenge in Asia to begin with, is actually getting exacerbated. So a lot of issues that we've discussed, and I'm sure my colleagues will also contribute a lot to it. I look forward to hearing from them and coming back again, Matt, as we go along. Thanks very much.
Thank you, Rajat. And since you brought up the global supply chains, I think it's a good opportunity to turn to Neil, because Neil, working for Standard Chartered, which is a global bank, very active in trade and supply chains, and working not only in Asia, but also in Africa, the Middle East. Neil, what's your sense? I mean, it was already hard before COVID to deal with the smaller firms in trade and supply chain finance, but how is COVID affecting this? Is there a silver lining?
Thank you, Matt. And just to build on what Rajat covered in his opening remarks, there have been some significant mega trends or shifts in trade flows and supply chains. And if I could just sort of classify them into 4 buckets. First and foremost, what happened, and this has been happening for a while pre the pandemic, and the pandemic just sort of served to accelerate some of these trends and catalyze them, if you will. So first and foremost, just touching on something like concentration risk, and the best way, Matt, to illustrate that is if you look at an average car, a normal car, it takes around 2,500 components to manufacture that car. But here's the rub, that only one missing component will mean that there is no car. So I think what the pandemic did in terms of impacting the physical supply chain, in terms of impacting logistics and distribution, shipping routes, everything else, highlighted this whole concentration risk. And in effect, what one saw was part of what might end up being the silver lining. So in the short term, there was a sort of shortening of these supply chains and a move to de-risk them. But equally, what we're seeing over the past couple of quarters is a movement towards diversification of supply chains, and with that comes opportunity, but also a definite paradigm shift from what has classically been a just-in-time approach to just in case, just to manage concentration risk. Rajat talked about the rise of protectionism, certainly quite apart from what I've referred to in terms of changes in the corporate supply chain. Entire nations are moving more and more towards protectionist policies. We've seen it with the Brexit in EU. We've seen it with regard to more recent tariffs between the US and China. Anti-globalization is another sort of macro trend. And then equally, what is happening is China's role is changing. There's a lot more intra-Asia, and we're certainly seeing it as a major player in the space. And we are a major SME bank. You referred to that. We provide financing to SMEs and have done so over the past couple of decades across more than 24 markets, not only in Asia, but in Africa. And that's where the sort of trade flows and supply chain between China and its trading partners is of crucial importance. And also the build out of the Belt and Road, obviously impacted by things COVID, is something that will perhaps counterbalance some of the anti-globalization trends that I referred to. One other trend we're seeing more at the higher end is the emergence of, well, two sort of trends. One is, sort of the cost arbitrage with China, labor cost arbitrage that China enjoyed is now moving out to other emerging markets, whether we're talking about Vietnam or Bangladesh. But equally, at the higher end of manufacturing, what we're seeing is in markets like Japan, with the increased advances in robotics and automated production and manufacturing, that is another change within trade flows and supply chains that we're definitely seeing. So back to your silver lining comment, what does this mean? And I think this represents huge opportunities for SMEs, especially the smaller SMEs that may not have been part of global supply chains, but may have a better chance of participation in either regional supply chains or in domestic supply chains. So equally, as manufacturing moves from offshore to nearshore or onshore, I think once again that represents opportunities for SMEs across our footprint. But one thing is to have the opportunity, but how ready are SMEs? And that's where I think banks have to play a role. Sort of participating in a formal corporate supply chain ecosystem is a non-trivial task. It requires a fair degree of sophistication in terms of just making sure you have quality product, that you understand the logistics of a large anchor, and relentless discipline and execution around quality control. And increasingly, again, accelerated by the pandemic, digitization, and we can come back to that later, but that is really key. FIs will definitely play a role in terms of providing working capital. We've done that, as I said, for more than a couple of decades as a bank, but it's more than just that. It's about capability development. It's about making sure that we make SMEs or enable SMEs to participate in not only formal supply chains, but improve their core, digitalize their core, and make sure that they're ready for a more automated and digitized environment. So we can perhaps come back to more on that, Matt, and I'll just hand it back to you.
Sure, and it's very interesting that you're showing that the challenge, the digital challenge, is of course there for the SMEs. It was there before, but there's an accelerated awareness, but there's an equal challenge, as you're pointing out, from the banker side and from the financier side in general. And I think, and you also mentioned how the role of China is changing, and that's a great opportunity to bring in my good friend Ning Tang, whose company CreditEase has been a part of our SME Finance Forum network since its inception 5 years ago. Ning, not everybody around the world may know of CreditEase. I mean, if I was talking about the company maybe even a few months ago, I would have led with the largest P2P lender in the world, but there's been a lot of changes, and you're still a very large entity, but you're changing many things in response to COVID. Maybe you want to tell us a little bit about how you're seeing things change in China, especially for SMEs, and also how you're adapting on the CreditEase side.
Sure, thanks, Matt. We are a local player with a global coverage, and we've been around for over 14 years as a leading fintech company. And what we've seen in China is that the pandemic actually accelerated small businesses' digital transformation. Now we ask around, all the business owners tell us that their top priority is digital transformation of their businesses. With that going on, actually digital finance will become easier, because in the past, even if you want to do digital finance, small businesses don't have a whole bunch of valuable data for you. Now they have more and more. Let me give you one example. A small restaurant you walk into. As a consumer, your experience is end-to-end digital. Yeah, your booking, your ordering, and your payment, so on. More importantly, the mid-end and the back-end of the restaurant is also digitized. Yeah, so you now have a lot of information about the business. Yeah, even the employee management, the shifting management, so on, is in digital form. Yeah, so I think digital finance will play an increasingly important role in China, in the region, and around the world, as the pandemic is pushing small businesses to more digital. Yeah, I say that in the future, only digital capability, businesses with digital capability can survive and do well. Secondly,
that's very interesting. Yeah.
Yeah. Secondly, I'd like to add, that it's very important that we focus on small business owners, not just small businesses, because it's people who make the difference. Yeah, that's what we did actually during the pandemic. We, through live streaming like this, gave small business owners a lot of advice how to digitize their businesses, how to take advantage of government tax, HR policies, so on, how to do good business during crisis moment. Yeah, I think at that time, small business owners really needed help. They were in very dire conditions. Sometimes they got very, very confused, very, very troubled, lost. So financial institutions, fintech companies could play key roles, in that regard. That's another, experience, I'd like to share.
That's very important, and you're bringing out a critical aspect of, we talk about digital finance, but we forget that digital enables so much more than finance. And as you're saying, if you're not only using digital to get the data and information you need to do a better job of financing the SME, you're also using, as you said in China, that same data to advise the entrepreneur on their markets, on their internal business management. And it's through these three legs, not just the single leg of finance in this stool, that the real digital transformation and all the opportunity is there. And also, as you rightly said, the ability to adapt in crises such as COVID, even in the services sectors, which you think of as just so analog, so high touch. So it's really good that you gave that example. And I know that Ari probably has a lot more to say about this too, because I know that Mastercard, coming from the opposite end of the world in Purchase, New York, although Ari's not based there. They also have been making a transformation that I've witnessed over the last decade or more from a plastic card company to a real digital transformer in chief, I think. And Ari, tell us a little bit more about how Mastercard is seeing all this.
Thanks, Matt, and some great comments from all of the other panelists. And it's leaving me very little to say. So what I will say, though, is digitizing and formalizing micro businesses and small businesses is a huge priority for Mastercard. And we believe that this is the next big frontier in the coming decade that we are really targeting. And what have we taken on as a goal? We're really looking at digitizing 50 million micro businesses in the coming 5 years, of which we're really targeting 25 million women entrepreneurs and really building some real scale and differentiation. Now, what's the issue at hand? I know many of the panelists have spoken about the opportunity. I think Ning touched very well on the ability to use data to underwrite and be able to provide credit. So one of the greatest challenges we have is lending for large institutions happen where you allow for cash flow lending. Moment you're an individual or a small business, interestingly enough, financial institutions will ask for collateral. And there's a whole host of issues around it. The informal nature of the small space, the small and micro industry. And therefore, is there a way where digital technology can power up the data engine and really provide cash flow lending to micro businesses and small businesses at micro ticket sizes is really going to be the big opportunity. I believe this is the future. And there's a lot that we can learn. And there's a classic example that I use is the Unilever model of selling shampoo in sachets and still making it profitable. Now imagine taking that analogy and you're now selling financial services and you're selling at micro price points, at micro value points, and really that is the opportunity. There's a whole host of things one needs to address. Electronic KYC, safety and security, the data and the analytics engine that powers up that ability to provide that finance, and the integrity of that, and how you enforce security interest in the event of default. All these are really important questions. But I do believe that technology, together with the advent of 5G, you're going to see some very significant transformation in the years ahead. I'm really excited about this space.
Very interesting. I mean, and as you rightly say, now we should be able to envisage these supply and distribution chains where they're digital end to end, right to the smallest firm. As long as, and it was very good also that you gave the caveat that this is as long as the underlying terms and conditions, including the legal and regulatory system, as well as the very important data governance and data access systems are able to do this. And whether it's in the Unilever work with Mastercard in Africa or in the work that Ning was describing internally in China with digitalizing these supply and distribution chains, it's clear that COVID is, if anything, accelerating the move. If you were thinking about it before as an SME, you had to do it yesterday in order to survive under COVID. And then the same goes, I guess, for financial institutions. Rajat, you wanted to get in.
Just to reiterate what all my colleagues have said, and you have emphasized as well, Matt, the whole benefits, huge benefits of digitization. Not only benefits, the inevitability. But one thing I think we have to keep in mind, and I know that companies that, like Mastercard and others, and of course, Neil and Ning, are very aware that there's a huge challenge of exacerbation of inequality. Those who can get on the digital ladder will do very well. But I think what we have to always be conscious of is that requires a certain infrastructure on education and health and basic infrastructure of connectivity. I mean, one thing that the COVID has done has actually made it much better for those who could afford the laptops and attend online classes. But it also forced many kids in India, many places, to actually drop out. So I think this whole challenge of digitization in the social space, particularly in terms of infrastructure, digital infrastructure, connectivity, health, education, will need to be born. And I know that all of you are very, very socially conscious. I just wanted to put it on the table. Thank you.
If I
That's
might,
a very important point. Go ahead, Neil.
thanks, Matt. Rajat and Ning, indeed, Ari, all of you have made very relevant points. But just sort of, if I may, just to sort of pull it together and share an experience across the entire Asian footprint. SMEs have always suffered from, financial institutions not having enough data. And data sources, once you connect the financing decision or your credit underwriting processes to receiving data direct from data sources, be they tax, be they risk bureaus, commercial, as well as individual, which gives individual risk bureaus, which gives you an inkling into the underlying promoters. All of that put together facilitates the lending decision. It's also about triangulating existing methods. So SME financing, and to your point, Ari, that you made, a lot of it is secured, but quite a bit of it is unsecured as well. Certainly our experience over the past 2 decades is we've got a substantial book of unsecured lending, and we go up to tenors of 2 to 3 years. But we've been using a one-size-fits-all in the past, which has been sort of the bank statement led methodology, which is useful. As you said, you've got to determine the cash flow, you've got to make an estimate of sales turnover, but you've got to now marry that with these new data sources. And as SMEs themselves are compelled and accelerated through COVID to increase their own points of participation, whether those are in e-commerce platforms or whether those are across procure-to-pay platforms, ecosystems, as they themselves put up shop windows and respond to their customers, whether those are B2B or B2B scenarios. What happens is every interaction results in creation of data, which informs the credit decisioning process. And what we're seeing is, certainly across a couple of our markets, both Asia and in Africa, we've been able to compress the credit decisioning to just intraday, which is fantastic for the SME, because the SME isn't in steady state. They're a far cry away from steady state. And in fact, what they need is a quick decision at a time when they are hard pressed for credit, as COVID did demonstrate. And there are lots of things that we can do there in terms of, putting it into one market and then understanding how we can work as a lobby to influence, for instance, the creation of commercial credit bureaus. There are a number of markets in Asia that don't have that. And had we got that bit of building block in, we'd be far better placed to serve the needs of SMEs. I did touch upon it, Matt, as well, in terms of it's not just financing. It's about financial literacy. Rajat touched upon that. And beyond financial literacy, I think it's also about connecting them with the right partners. Increasingly, we're seeing firms going cross-border. So how do you connect the dots, introduce them to new sources of procurement, establish avenues of distribution? And that's what brings the network effect together. So I think there's a much larger role for financial institutions, whether it's Mastercard in its new avatar, or indeed all the financing institutions in China.
Matt,
Thanks, Neil. Ari, you wanted to get in. Yes,
yeah,
please.
if I may come in, 2 comments. One is, I think, Rajat's point on the financial literacy agenda, which I think is an absolute critical agenda. We at Mastercard have taken on a $250 million commitment for micro and small businesses, which is going to cover a whole host of things: literacy around safety and security, as you connected the digital ladder, as Rajat you used, and as you connect your businesses. Literacy around financial literacy. Why is digitization important to your business and to your small and micro, area that you're working in? Why is the notion around tax avoidance is a notion of last 30 years, and it's an irrelevant notion. You only pay taxes when you make money. And therefore, what we are doing is in Indonesia, incidentally, we've taken on this thing with our Mastercard Academy, where we are going to train 100,000 Indonesians on digital and financial literacy. We're running a similar program in India as well with the Confederation of All India Traders, but it's a really fun, foundational program on how you drive that literacy and awareness, and therefore this climb up that digital ladder becomes a natural instinct as opposed to necessarily a throttle and pull way where many governments try to make that happen. And then to Neil's comment, if I can be a bit provocative, is it time to completely change paradigms on how we evaluate risk, how we do small ticket lending, and is the telco industry a great model? Let's look at the telcos. At $2 a count of a prepaid account, a telco can make money and run profitably. And they still have 10, 20% of their book, maybe 10% of their book, which is postpaid, which is a form of credit, if you really think about, right? Are there learnings there that we can bring, which is an average 3,000 to 4,000 rupees for the benefit of our global audience? We're talking about a $40, $50 limit on a postpaid account and probably $2 to $3 on a prepaid account. If you can run a profitable business, then there's probably some paradigms need to dramatically shift. And really the learnings from the fintech space, and I think Ning's comments around the data and the ability to lend with greater frequency and not having a feet on street model, which actually destroys cost structures and enables you to succumb to old age practices, I think is something that we should be testing paradigms on in the coming 5 to 10 years.
Absolutely.
I'm glad
Tenors
you
are
raised
going to
that.
get shortened. I couldn't agree more with that challenge, Ari. Tenors are going to get shortened. You've got to be present in various points of participation in order to succeed.
And I'm sure, Ning, you'd like to get in now, because China has shown us, of course, how you can be looking at customers completely differently. And there are tens of millions of Chinese, whether they're consumers, students, business people that have been able to benefit from access to finance in the last 10 years, thanks in part to organizations like yours.
Yes, and I like to add to what my colleagues have just said. I very much agree with their great points. What I like to add is that actually financial knowledge and the financial tools can help small businesses tremendously. Other than digital finance, for example, insurance is so important. Yeah, for to help small businesses weather through pandemic crisis. Many small businesses in China are not well protected from insurance point of view. They do not quite understand how insurance can protect them. Another example is that many small businesses in China, their owners actually mingle company assets with family assets. This is very, very risky. Yeah, good times, it shows great responsibility. Yeah, so companies, small businesses have long, like, staying power, yeah, because of this strong responsibility taking. But during crisis moment, if family assets are not well protected, business owners cannot manage their businesses very well. Yeah, they are subject to huge risk. So financial tools like those that can help separate family assets, family fortune with companies can help tremendously, like family trust, like some other vehicles. So I think these tools put together can be very, very helpful. Yeah. So for small business, it's not one thing cure all. Yeah. So it's kind of like a multi approach, in my view.
Thanks for bringing out that point. And of course, while we had problems financing SMEs in the pre-digital era, and of course we had equal problems trying to provide the sort of education and training, but hopefully digital is offering new channels to do that and to do it at scale, whether it's in Indonesia, as Ari was talking about. What's been done in China is quite outstanding, to bring new products, insurance, wealth management to these clients. And of course, to get back to that other question of how do you actually secure lending and motivate repayment? Well, if I'm an SME and all I have is the loan relationship with you, that's one thing. But if you're helping my financial education, my internal financial management, my market management, well, boy, I don't want to disappoint you. I'm going to be a good customer, right? Because the more services you're providing, the stickier you're making that customer. And all of you have pointed that out very, very nicely. And hopefully this is going to be a kickstart.
Matt, to your point, I mean, the journey can begin with an accounting software provider, and you can bolt on an HR utility to that just to make sure that you're making government returns on time and not falling foul of any regulations or compliance issues. So there are many, many approaches, and it is beyond banking that we're moving towards. But the other thing is there are great examples. Ari talked about Indonesia and Ning about China. But what we are seeing is their intra-Asia flows, and certainly working with a number of the Chinese e-commerce platforms. And we're just absolutely conscious that we've got to make sure that the underlying client on the platform has subscribed to all the data privacy regulations. Once that hygiene factor is taken care of, bringing that cross-border is the new adventure, if you will, or the new frontier that our bank is currently engaged in. And we're seeing importers in India and Singapore, Korea and Hong Kong dealing with mainland Chinese exporters as they have for years. However, the difference now is it's shorter term working capital. It's based on data of the platforms, and that is supplementing the traditional bank statement approach or not. In fact, we've got some instances where we are making use in a sandbox environment, and it's now being scaled up to make use of credit risk assessment methodology that's used by an e-commerce platform, unheard of in the old day, that a bank can then disburse funding short-term in nature based on somebody else's credit risk assessment. So those are new frontiers that we're crossing every day.
Great, Rajat, you make it quick. We're in our last minute. Good point.
I just wanted to expand exactly what Neil said a bit, to say that various projections by World Bank, ADB, others show that the emerging economies by year 2030, 2035 will account for almost half of the global consumption. So I think the emerging markets, not just Asia, but obviously Asia led by China, India, and others would be a driver. There'll be a huge demand side for need for financing, medium, small scale enterprises. And therefore, many of these issues will have to be addressed right here. And there, I think an important point, just to close my statement, that what I'm noticing is that the regional supply chains are becoming more important than global supply chains. Global, yes, it was obviously an important one, but now it is much more regional. And I think India, joining RCEP is one issue we can talk about separately. But regional supply chain, regional integration, I think is going to be a major driver in the foreseeable future in this space that we're talking.
Thank you for that challenge, Rajat. And the holy grail will be how we use digitalization to work on this cross-border challenge, which has always been a bugbear for the smallest firms. And I'm confident from hearing from you, Rajat, from Ari, from Neil, and Ning, that we're dealing with a difficult crisis now, but there definitely is a silver lining, and it's accelerated our digital thinking about all these things. Thank you, gentlemen. And I send us back to our MC for more of the Singapore FinTech Festival.
Thank you so much. That was Matt Gamser. He's Chief Executive Officer of the SME Finance Forum. Matt, we really enjoyed that panel conversation about digital finance. Just a reminder of who was on the panel there. Neil Daswani, who is the Global Head of Business Banking and Corporate Partnerships at Standard Chartered Bank. We also had Ari Sarker, who is the Co-President of Asia Pacific at Mastercard. There was Rajat M. Nag, who is Distinguished Fellow, the National Council of Applied Economic Research, and Tang Ning, who is Chief Executive Officer of CreditEase. Some fantastic points coming out of that. And it does seem like digital finance will be a powerful tool to help small and medium enterprises in these times. In particular, it's worth mentioning that the MAS, the Monetary Authority of Singapore, has made quite a few announcements this week, of course, it being the week of the Singapore FinTech Festival. But in particular, SMEs in developing countries will get help to access global value chains under a partnership that will be going on between the United Nations Development Programme, or UNDP, as Global Centre for Technology, Innovation and Sustainable Development, and the Monetary Authority of Singapore. It's clear that that SMEs are a really important part of the global economy. And we've talked about this week already. It was the Economic Summit yesterday, the Infrastructure Summit today at the Singapore FinTech Festival. And one of the big talking points has been this. Small and medium-sized enterprises, we're talking 50% of global GDP, but so many of them have been adversely affected by the global pandemic over the last year. So great to see initiatives like this, where partnerships will provide SMEs with access to digital finance and platforms that will get them on their feet.